Hello and welcome to My Finance Teacher. I hope everybody is having a nice day, and today is 5th of March 2018. Looking at gold and what gold is going to do over the next, say, several weeks, the first thing I want to mention is that, of course, on the 21st of March, we have an FOMC meeting coming up. On the chart, it's somewhere over here, around 21st of March. And as we see here, the market expects a rate hike on that meeting on the 21st. So the market thinks that there is around 85% chance of a rate hike in a couple of weeks from now. Usually, in expectation of a rate hike, gold trends downward. So we have already been trending downward for a couple of weeks, and if this trend downward is to continue, say until at least the 21st of March, that would really look like the intermediate cycle has already entered into its declining phase. Another factor that makes me think the intermediate cycle has already topped and we're not going to go above 1370 over the next few weeks is that the price is spending too much time below this 20-day moving average. Some people look at 10-day moving average, some people look at 20-day moving average, but basically, for this line, basically whenever the price spends too much time above some sort of a short-term moving average, it means that the intermediate cycle has already topped and is entering into its declining phase. Like this previous cycle from July to December last year, whenever the gold is in the advancing phase of its intermediate cycle, price is generally above the short-term moving average, and whenever intermediate cycle is declining, gold price spends a lot of time under this moving average. Same here in the intermediate cycle before that, from December 2 years ago, or December a year ago, December 2016, while price was spending a lot of time above the 20-day moving average, we were in the advancing phase of the intermediate cycle. And after price spent most of the time below the 20-day moving average, that's when we actually entered into the declining phase of the intermediate cycle. Although there were sort of two tops here, during the declining phase of the intermediate cycle, the price has managed to come close to its recent top. Anyway, something interesting was happening there. But basically, we are now spending a little bit too much time under the 20-day moving average. Plus, if we continue down in expectation of a rate hike, that would really make me think the intermediate cycle has already topped and we are going down. Although I did expect, and I mentioned in my previous videos that I did expect gold to break slightly above this recent high. I thought intermediate cycle would top anywhere from 1380 to 1400. Well, that didn't happen, and we are now moving down. What are we going to see going forward? Well, I expect gold to move down, as I mentioned, into the 21st of March. And if we look at the recent couple of years, whenever rate hikes were announced, that was actually quite good for gold after the announcement. Although in expectation of rate hikes, gold tended to move down quite a lot. So the same thing might happen near the end of March. We might see a strong rally in gold after the FOMC meeting, either soon after or a week after that. That has happened in the last couple of years as well. If that happens, if we see a strong rally sometime after the FOMC meeting, that might mean that we are going to enter a new intermediate cycle in late March, early April. If that is going to be the case, then one would say, hey, how about this intermediate cycle? It's a little too short, no? Lasting from sort of middle of December to second half of March. And usually these intermediate cycles in gold last for about half a year. So one would expect this cycle to continue into May or so. Well, sometimes intermediate cycles might take less than 6 months, although they usually do last for half a year. And another chart that makes me think we might see a strong rally sometime near the end of March is the US dollar, because the US dollar also follows intermediate cycles that sort of generally last for half a year, and there's been a cycle that I think has finished, that has been going on since early September until just recently, a couple of weeks ago, sort of mid-February. So if we are entering a new intermediate cycle in the US dollar, plus with the expectation of rate hikes, dollar should strengthen, then that gives us just several weeks for strengthening in the US dollar, several weeks of going down in gold. And after that, once the intermediate cycle in dollar tops, say somewhere around here, maybe even earlier, so say first part of March, that's close to the end of, first part of April, maybe sometime in the end of March. Once dollar tops and moves down in its intermediate cycle, that's going to help gold strengthen, and that might push gold into a new intermediate cycle. So that's another factor that makes me think this intermediate cycle in gold might turn out to be a short one, and the confirmation of that would be a strong move down here, indicating the end of the intermediate cycle, as usually these intermediate cycles finish with more or less violent move down. As to how far down gold might go over the next several weeks into end of March, well, I don't think gold is going to go below this December lows at 1240. There might be a support line somewhere here, 1260 or so. That's the zone that gold tried to break a couple of times earlier in October, November, and it didn't manage to do so before it entered this violent end of the intermediate cycle. So we might go down to 1280, 1260 within the next several weeks in gold, and after that probably start a nice rally. Good luck in your trades. Thank you for your attention, and follow me both on YouTube and Steemit. Thanks a lot. Bye bye.